Okay, good morning, everyone. I am back at it, just starting to get into the markets. I've been looking at the markets, the stock market, a little bit this morning, just going through various charts, trying to get my bearings on where we're at. So I'm going to go through that. We're going to start out with general market analysis, look at any kind of individual trades. I don't see a whole lot, but I do want to point out there is some key levels to watch on the general market, and there might be some trades right here. So guys, drop me a thumbs up if you find value. Let me know how you guys have been doing in the comments below. And as I go along, if you're interested in learning this skill set, as always, check out my stock market technical analysis course. I put that together for you guys. Okay, triple Qs. So, we've seen a pretty strong rally the last couple days. I've definitely noticed that. And that's why before I left for vacation, I did in my comments say I'm lightening up on all my shorts, and I pretty much went into my vacation flat. I covered all my short trades, and I actually took a long on Facebook. I can point that out and what's going on there. But a couple things that I'm seeing on triple Qs, if you look at the daily chart. All right, so this is your bullish falling wedge that we put in, and most recently we put in that low way down here, and it just wasn't really able to break. That low also was a bullish divergent low, so see the bullish divergence. We were talking about that for a while, saying, it's giving me a little pause on these shorts, at least right now, because we have this strong bullish divergence. We can't make a new low. We started to recover it. It just, all signs were pointing towards the fact that it just, that we're getting a rally. Now, the question that we have to ask ourselves, and nobody knows the answer, the only thing we can do is read the charts and make assumptions, is do we have a bear market rally right now, or have we seen the lows in the bull market, and we're seeing the lows in the correction, in a bull market correction, and we're going to go on to make new highs. All right, so that's really what we're trying to figure out. Triple Qs, if I look at the hourly chart, starting to put in some negative divergence on the hourly. It just started to confirm. I saw it show up this morning, but then it hadn't quite confirmed. But we're starting to see that confirm where the RSI is starting to point down. And then on the PPO, it's pointing down as well. So confirming on the momentum indicators on the short term. So that's an hourly chart. So we might get a pullback. If you look at the daily, we've had a pretty strong rally, but we easily could see a pullback, even a pullback down to the breakout point. We have a level of support about 342.40, and then we also have the breakout point down here. That's very strong support as of right now. Looking at the daily chart, that's your downtrend line. All right, we popped it, but maybe come in and back test it. All right, that's completely possible. Also, if we did that soon, there's kind of a intersecting trendline support on this red line. Again, that comes from your weekly chart rolling out on triple Qs. This is your bull market channel on the weekly. And again, we've been trading to the top of the channel. As I zoom in, you can see right here, we hit that red trend line. We hit it there. And recently they broke it here, but it still held support. We did break down and we did get a sell signal, but the very next week, big bullish engulfing candle. So if we come down, we might hit support there and hold. That's kind of a key level, a longer term level to watch on the weekly chart. All right, so that's what I'm looking for. SPY, we're just there above the 200-day moving average. And again, this is a daily chart. If we fail here, at least on the weekly chart, we could kind of hang out above the 200 for maybe a little bit, but if we fail, then that's going to be another rejection of the 200. That would be a sign that we were looking for that's just kind of a check mark that we are maybe just in a bear market rally to get rejected at the 200. Bear markets, just like bull markets, when you hit the 200, that's an opportunity to buy. Bear markets, when you run into the 200-day from below, it acts as major resistance, and it's an opportunity to sell. All right, so that is on the SPY at the 200. We'll see if we get rejected there maybe sometime this week. And again, the downtrend line's not as well defined on the SPY as it is on the triple Qs, but I've got it marked kind of right about here. So we could come in for a back test, maybe something like that. And then from there, we could be in a short-term uptrend, and that could last days to weeks. We don't exactly know. maybe all the way up to about 462. Could be the area of major resistance. Again, 462, if I look at the weekly chart on the SPY, this is going back to 2009. This is your bull market trend line. All right. And we failed it twice, but the Fed pumped it back up. Again, we recovered the trend line, but we got a big sell signal right here on the weekly. All right. So if we rally up to that trend line, that's exactly where we could get rejected and see that next larger leg down. All right, so this is longer term. That's a longer term time frame, which means it might take us a week or a month or so to kind of rally up there if we're going to get that rally. Things to watch for. Okay, IWM. This one actually looks like an objective short right here and now. So I'm going to take a short on this one. Key level to watch, all right? So on the daily chart here, this is your big sideways trading range that IWM was in for, over a year basically, or almost a year. We broke, we got a sell signal, and you can see what's been going on. The level to watch is about that 209 area. That was kind of key support all through here. They hit it here. There's another tag of that. And below, it's been acting as resistance. So the resistance here, a little reaction right there. And they rallied it right up to that major area of resistance. So again, we short at resistance, and that is what I'm looking to do. So taking a short on this. Now, if they pop it intra-week, then maybe it'll fail. They could still pop it, but if it's just marginal, we're just kind of hanging out, making it look like it's going to recover, but it's not very impulsive, I would expect at some point this week we fail and it sells back down. So this is a key area right around 209. Selling off a little bit today. We'll see if that continues or if they just close it right at that 209 area. Now, if we get rejected here again, then we'll probably trade back down to the bottom of the range potentially, which would be about 187, 188 really. And again, that was the former low. They had 2 attempts to break that and failed both times. So a break of that, and that should most likely guarantee that we're going to head down to our longer term, support area of about 170. So we'll watch that. That's kind of a key area for, for major support should be down there, but and we're at major resistance right now. So I like this one. Well, things to watch though, is you want to see the Qs and SPY break down as well. The IWM's not going to break down without the Qs and SPY. They kind of all like to trade together. So I'd look for breakdowns in all the indices. Look for impulsive selling. It might not come today, but maybe in the next few days. And if we don't get it, then, we're perhaps, not in a bear market, and this is not a bear market rally, and we just had a correction and the correction's over. That's completely possible. I think we're in a bear market rally. That's where I'm leaning. Just some signs across, just what I'm seeing with major trend lines getting broken on the SPY and seeing that longer term weekly sell signal. So yeah, that's what I'm watching for there. Gold's kind of, gold looks like it wants to run down and tag the support. So again, here's your big isometrical triangle right here on gold. Gold's in a bull market since 2018. Here's your bull market. Tags of support are areas to buy. So you can see each tag of this was an area to buy. We had a breakout of this, this downtrend line. Let me kind of clean this up a little bit. All right, there's your downtrend line, resistance, 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 resistance. Breakout, nice and impulsive, everything you want to see. So it is definitely a buy the dip. And now we're coming in. So we could sell all the way back down and retest that breakout point. And that would be the most objective area to buy or add besides the breakout point right here. Okay, so if we get that, I'll be looking to buy that dip. And same goes with the miners. Each miner has its own kind of support level, but I'll be looking to buy the miners on a dip, if gold's going to get down there. I don't know if gold will do it, so I'm still carrying kind of a key core position in the miners. I don't know exactly if it's going to give everyone that perfect entry. Oftentimes when you're in a bull market, you're not going to give it the perfect entry for the people that didn't want to get long. When we had the bullish divergences and the tags of these support lines. So things to watch for on that one. Keep an eye on the bond market. So the bond market is starting to invert, or I checked it this morning. The 3 and the 5 year are actually inverted, and I didn't see any inversion across any of the other any of the other bonds time frames, but we're starting to see the bond market starting to invert, and the TLT is continuing the drop, which is your long bond, which means interest rates on the long bond are rising. So that is in general not good. Not good for tech stocks for sure. So we now have the highest interest rates that we've had in, since going back to 2019 timeframe. Big basing pattern right here. It looks like we have long-term support right here at 134.62. You can see that was resistance here, support, and we now have a breakdown. All right, breaking down below that. So look for interest rates to continue to rise is what I'm saying. And if they do, that should continue to put pressure on the tech stocks. And just another sign that I think this is a bear market rally is the fact that we're seeing interest rates rise. Okay, and one thing I want to point out, going back to the triple Qs, because again, I think this is one of the major sectors that are potentially in play. So Qs, you got the 200 simple moving average is up here at 368.14. All right, so we might get up there, but one thing I want you to notice, XLK, which is also just another tech sector, it just doesn't include Amazon, is it just hit the 200-day right there, not above the 200, and we're seeing it kind of sell off, at least on the first tag of that 200-day moving average. So again, below the 200-day on this tech sector ETF. Okay, so triple Qs doesn't have to get to the 200-day. If you look at triple Qs, we already hit the 200-day back here on February 2nd, and then we hit it again on February 9th and February 10th. So nothing says we actually have to have a full test of that. And on XLK, on the hourly chart, we have negative divergence just showing up right there. Now again, it's just the hourly, so it's not always giving us a sign of a huge pullback, but it does give us a leading indicator that the probability is elevated that we're going to see a pullback. One thing you could do to watch for is kind of draw a trend line out on the hourly chart like that for XLK. Just kind of tighten that up. And then look for a break. Look for an hourly breakdown of this trend line. This is just the most recent rally. Okay, we have negative divergence, but you'd want to wait for at least a breakdown. And then where do we go? Well, if you look at the daily, a little bit of support right here, but it's not my favorite trend line because I really only have two reactions here and here. So, I'm not going to really treat this as a potential target. I think we could go maybe a lot lower. Maybe you just trail your stops. Obviously, if we get down near the lows where we recently were trading at, then I think we're heading down for, a much larger leg to the downside. And again, if you break above the 200 and start closing, then likely the triple Qs is going to run up to the 200 as well. And, we might be on our way to new highs. All right. So where we're at right now, I just want to point out that it's kind of mixed signals. I don't have strong conviction either way. So the way that I trade things, if I don't have strong conviction and the charts aren't exactly clear, at least to me, then I just take smaller position sizes. All right. I think we are in a bear market rally, so I'm looking to add to some shorts, kind of reestablish shorts in IWM and some other various shorts. But at the same time, I don't have strong conviction. So rather than take a full position, I just take a partial position and then I'll add to it if I get confirmation. Banking sector, BRX. So this is a banking ETF, similar to XLF, but I think it's more about the banks, the actual banks. And XLF, I think, has some insurance companies and stuff in there. Below the 200. So we got a clear sell signal here on the daily. We broke down below the 200 and we're back testing right now. All right. So look for this to be an area of major resistance. They might pop it and try to close above the 200 maybe one day or so, but I would look for this area for a rejection in this area. All right. If you see that rejection, that's likely just another indication that we are entering a bear market and the 200 is going to hold as resistance, which I think is where this is leading us to. We also had some support. I just kind of marked it out right here so you can see support, support, little tail, but still closed at that support. And then once we finally broke, big impulsive sell signal and running right up for a back test. And so far, getting rejected. All right, so that looks like a short to me as well right there. If you look at the hourly chart, you can see, yeah, slight negative divergence just starting. This might need to build for a little bit. Maybe we kind of chop around and pop this a little bit, put in that clean negative divergence. But it does look like an area of major resistance where I think we're going to get a reaction and a pullback from. All right, let's go through these FANG stocks and I'll wrap up. I'll also cover this Facebook. All right, Amazon, bigger picture. If you look at the weekly chart, this is really what I'm watching. On the weekly, going all the way back to, I mean, really, this is the first tag of 2008. I really need to just tighten this up. This is your Great Recession lows right there. So this is kind of your last bull market. And you can see on the weekly, hit support there, and we hit support there. So 3 tags to establish that trend line. And recently, as we move in, big impulsive breakdown sell signal. All right, that's a big breakdown. Now, again, this has been a strong bull market, so you're going to have a lot of buy the dippers, and they don't give up easily. That's why they say it's hard to kill a bull. But basically, sell signal, broken bull market trend line, back test, failed, back test. All right, they're at the 200-day, getting rejected so far. I would expect we actually fail this week and don't really close above the 200. Now, if they can close the weekly candle above the 200, then maybe this was a false breakdown, aka bear trap, and we're going to go on to make new highs. All right, that's completely possible. Otherwise, I would look for a failure and probably a weekly close back below this trend line as well. All right, so it's all about how the week closes. If I look at the daily, you can see here on the daily, we are right there at the 200-day. And, so far getting slightly rejected. Nothing impulsive, though. It's just kind of chopping around there. So we need to see what happens there. Google is above the 200-day as of yet, but we'll see where the day closes. The 200-day and resistance, 2,764. If we sell down and close the day below that, it's just a mere indication that, okay, that was major resistance, and we're likely going to get more downside. Facebook. So Facebook had this bullish falling wedge here, and when I saw it break out there on March 16th, I went long, and I closed that long out today. This could go higher, but I'm seeing signs in the broad indices that we might be coming in for a pullback. So couple day trade, grabbed it, it was up about 10% while I was on vacation. So I closed that out, and we'll see. Now, obviously, there could be a lot more upside. There's a big gap to fill on Facebook way up here at 324. So we could fill the gap. Or at a minimum, get to gap entry at 340 or 246. All right. I wouldn't expect, if we're in a bear market, to fill this gap. All right. This is a lot of trap longs in Facebook. Pretty much everybody going all the way back since 2020, August of 2020, has been trap long. So oftentimes the market doesn't give those trap longs an opportunity to exit on a nice clean exit with like a gap fill or something like that. So if we're going to trade up to gap entry at 246, that should be the area of resistance. All right, that's my view on it. But we got to watch the broad markets. Microsoft at the 200-day again. We'll see where this closes. Looks like we're just doing another test of the 200. So you can see what's going on. We're just breaking down, testing the 200. Breaking down, testing the 200. We're chopping around, all right? So maybe we'll just have to see. We could obviously continue to rally. On Microsoft, you've got this trend line right here going back to 2020, and it's got some tags of support right in here. We broke down, so yeah, you could come up and do a full back test and maybe even put in a new high. All right, so I don't think that's what's going to happen. I think that we're in a bear market rally, and I'm looking for continued proof of that. But again, my conviction is not, it's not high conviction. So ultimately, we want to take smaller position sizes on anything until we get more proof. And Apple, Apple didn't really break the 200. I mean, it broke it one day, but they snapped it right back up the following day. So again, kind of a bear trap right there where it broke and then they recovered it. We are at what looks to be resistance. So on Apple, we have this bearish rising wedge pattern, and this is the top of the wedge. You can see there's support, support. We hit it right there, chopped around here for a little bit, finally broke above, and again, we hit it there, and it was resistance, and we're at it right now. So this should prove to be resistance. Now they're making it look like they're going to pop it above. I think we're likely going to fail right here. But things to watch for on the hourly chart. Just slight bearish divergence because we have an equal high on the hourly but a higher high in price. All right, so slight bearish divergence on the hourly doesn't mean it has to stick. You know, we go much higher from here, we'll probably burn through that bearish divergence. But we are at what looks to be good resistance on the daily chart. So I'm looking for a failure in the markets, you know, very soon. Maybe it's not today. We might just kind of hang out right where we're at today. And maybe it comes in the form of a gap down tomorrow. That's kind of where I think we're heading. But again, low conviction. So I'm looking to just add with more proof. All right, guys, that's all I got for today. Drop me a thumbs up on your way out, and I'll catch you on the next one.